Hello everyone, this is Big Money Chasing Big Money by investing in stocks on eToro. Back in 2022, eToro reached out to me with a questionnaire about my experience on their platform. I filled it out and surprisingly they gave me $100 as reward. This was a pretty good incentive to try to make the most out of this, and I started to take stock investments more seriously. I put together a strategy which was proven to be working, so I started to increase my seed funds. Fast forward 2 years and I managed to have decent gains with my stock picks in a considerably short amount of time. Today I am up 62% of my capital. In this video, I will explain everything, starting with how and why I use eToro for investing in stocks, what my strategies are for finding the right entries for the right assets to buy, what my past results were, and what I expect to achieve in the future. This is a low-risk, long time frame project with the goal of wealth preservation and accumulation. If you're new to stocks or just simply want to understand how I do it, tag along. I will upload update videos every month about my progress. As this video might be longer than the average attention span, I have included timestamps so you can skip to the parts which are interesting for you. However, watching it from the beginning until the end will give you the full picture. Before we dive in, let's see why eToro is the platform of choice. There are countless providers that offer stock trading for their clients, but what I found was that usually there are some uncomfortable fees popping up, the background is uncertain, or bigger deposits are needed to start investing. Many of them offer only CFD trading or trading options, and all things considered, there is usually a catch in most of these. eToro, on the other hand, is just perfect for retail stock investors. It is extremely user-friendly. The UI is clean and simple. No wonder it was my entry gate to the world of investing and trading back in 2017. It's possible to acquire an asset with just a couple of clicks. You don't need large amounts to trade. The minimum deposit starts at $50 and the minimum purchase limit for stocks is $10, and you can also use different currencies to top up your account. Most importantly, if you buy a stock, it becomes your property. You will actually own the underlying asset. Practically, you become a real shareholder in that company. This means that you're entitled to get dividends. Often, you get a vote in certain cases. In other words, eToro acts as a direct broker of shares, and you are really the owner of what you invested in. For me, this is so much better than just simply CFD trading, which is a contract for difference. In practice, buying stocks in CFDs means that you don't actually own the asset you buy. You just sign a virtual contract that registers the purchase price. And if you sell above that contractual price, you book a profit. If you sell below, you book a loss, and that's it. But you never actually own the share in this case. It's just all virtual paperwork. This is how leverage trading works in the future markets as well. So there is a reason why I prefer to have real ownership when it comes to long-term investments. There is also a wide range of stocks to choose from, as eToro is a registered broker in many of the most important exchanges. You can choose from New York, Hong Kong, Sydney, major European stock exchanges like London, Frankfurt, Paris, and so on. You have almost unlimited options to explore. There is hardly any serious company that you cannot invest in. In the past, when the list was much shorter, you could actually send a listing request to eToro and they would evaluate the stock and include it in the tradable assets within a few weeks, really. The best thing of all is that buying and holding stocks on eToro doesn't really cost anything. Obviously, there is a spread, which means that buying price is somewhat higher and selling price is somewhat lower than the median rate. In the case of major stocks, which have a massive buying and selling exposure, the spread is so narrow that you can barely notice it. It only gets wide when a certain stock lacks buyers or sellers, and it becomes difficult to match the price between the two sides. Now, eToro has other products as well, which can be quite interesting. You can buy popular ETFs, invest in indices, commodities like precious metals, oil, or raw materials. There are smart portfolios, and you can copy trade as well. Now, I don't really like any of these. There is a banger product that is practically free to use, while others have fees and higher risk, so why bother? eToro also has a social trading aspect, which means that other investors can discuss some ideas and their opinions. This is potentially valuable, but just as with any other social media platform, there is a lot of useless information as well. You can find highly sophisticated posts just to be followed by bitter investment trolls. I take it more as an entertainment factor rather than a useful tool for making investment decisions. All things considered, eToro is a very easy, simple bridge to owning stocks without spending any noticeable money on fees. Now, let's talk about how I use the platform for making gains. My goals are rather simple. Make my investment grow in a steady pace year over year to maintain actual purchasing power or even increase it. Here are some numbers to keep in mind. The average return of American stocks is roughly 10% per year. It can be more or less depending on the given year, but it is safe to say that the S&P 500 index has proven to be one of the safest means for slow and steady growth for anyone who was looking to invest. However, my goal is to surpass the S&P 500, in other words, beat the market with some well-placed entries in growth stocks that have promising future potential. For the time being, I picked the stocks and the entries myself, but I plan to gradually move towards indices if I see a good entry point. The aim is to gain more than 10% over a year. Since I started taking stock investments seriously at the end of 2022, I have been up 62% of my investments. That is a 30% annual increase on average with very low risk, and this is exactly what I'm looking for. I don't have a fixed amount of money that I would be spending on stocks every month. I literally just buy the assets when I see a good opportunity. It means that sometimes I don't buy anything for months, and in other cases I spend quite a lot if there is turbulence in the markets. In terms of planning, this makes it a little difficult to make profit estimations, but I am absolutely ready to miss out on estimates in favor for better entries. At the end of the day, my goal is to have a decent stock portfolio that maintains or gains value, and I would even get some shareholder dividends. The idea is to look for short-term anomalies in stock valuations that will get corrected eventually. In other words, I am looking for long-term ownership stocks of solid companies that could be oversold or heavily undervalued due to temporary reasons. My analysis is mostly a fundamental one. I check the position of the company in the sector they are in and ask questions like how much money they make. Are the competitors taking over their market share? Are they strategically important for the future? Where will they be in 5 years' time? Even though I apply some trading tools when choosing my entry, technical analysis plays only a secondary role in my decisions. Over the years, I noticed that even though markets are usually right about the valuation of stocks, they can get overextended easily. In times of good news, the price gets overbought, and in case of negative news, aggressive sell-offs happen every now and then, and that is exactly what I'm looking for. I only invest if I see a good opportunity in the market. Sometimes I am completely inactive for months and just watch the markets move. If there is a sudden panic about a certain stock that makes the price plummet, I investigate the reasons, and if the problem seems to be overblown and only temporary, I make a move. Now let's see a couple of examples. The example of Meta, formerly known as Facebook, is a good one. In 2022, the general investor sentiment was that Mark Zuckerberg has lost his legendary edge and vision for the future of the company, and his spending spree on the metaverse development had no positive reception. After missing some earnings estimates, the price plummeted below $100. Now, I had a strong conviction of Meta, and even though the numbers were quite scary, I was confident that the overall strategy was good, the future vision was solid, and the problems were only temporary. I considered the company a long-term winner, especially after I listened to the full conversation Mark had with Lex Fridman. I had no doubt that Meta is in good hands, so I took the shot at a $100 price tag. Today, one Meta share is above $570. The other example was Coinbase. In December 2022, at the lowest points of the last bear market in crypto, after the collapse of FTX, the stock price of Coinbase was hovering around $40. I was sure that Coinbase had decent fundamentals and that the market shakeout will end eventually, proper regulation will be introduced, it is just a question of time. So I pulled the trigger just below $39. Today, the price of Coin is $296. So timing is essential here, and I don't try to make the perfect shot every time. Sometimes the market will keep dumping the stocks more after my entry. In these cases, I use a simple DCA strategy. This means that I am scaling in at lower prices and will scale out as the price recovers. An example for dollar cost averaging into a stock that keeps on plunging is Ubisoft. You probably know this video game studio. They had their fair share of issues lately, which put them into a downward spiral. However, knowing all the titles they own and the changes that they made to steer the company in the right direction, I believe the price is ready for recovery. I will definitely keep my positions for a while just to see if my theory is correct. When I find my picks, I establish some entry points by some very simple technical analysis. I use the weekly chart of the stock and apply the RSI and Bollinger Band indicators. On this long time frame, combining these two tools will help me identify a potentially good time to buy. This means that I am an active investor for the time being. I analyze the fundamentals, analyze the technicals, and monitor the progress over time. Later on, however, I will probably switch to a more passive method of investing, mostly into index funds, and leave the monitoring part of the game behind. Investing in stocks requires a fundamentally different mindset in terms of time frame. It just needs a different approach compared to crypto. I had to accept that I am looking at the range of at least 5 years and that flipping stocks frequently would probably make me less profit compared to just holding the right stock over time. From short-term trading, I had to switch to long-term investing in promising companies. The stock I bought from that $100 reward that I mentioned in the beginning was actually Palantir. The company has a very solid product and their stocks were aggressively being sold on the market. I pulled the buy trigger and the price just kept on plummeting. I bought the second batch at lower prices, but still it was down for quite a long time. I can tell you, the first couple of weeks it felt like a failure and I was ready to sell everything and forget about stock investing at all. Nonetheless, I decided to stick to my conviction instead. Eventually the price recovered and I managed to sell my positions with a bit of profit. Of course, should I have kept the stock a little longer, I could have booked even bigger gains. The lesson learned there was that if I manage to catch a decent entry of a solid company, sometimes it pays just to sit tight and wait for the market to correct. Looking at the big picture, if I was able to hold the stock for a year, a few extra months could have meant significant difference in the profit. That being said, the point is that I got out with profit just by waiting for the prices to catch up to the reality of Palantir's true value and reinvest the funds when other opportunities come along. With this idea in mind, combined with consistency, I am looking at gains through different glasses and I can tell you it comes with much less stress and anxiety compared to trading. Risk is the other factor which is much different compared to what I was used to before. Since I only buy stocks on spot without any leverage at all, I have no risk of full liquidation. The companies I invest in usually have a decent financial background with plenty of reserves. Obviously, even major companies can file for bankruptcy, and I had a case where I was trying to catch a falling knife. This was First Republic Bank. That case was actually going quite well and I was looking at booking some profits when JP Morgan stepped in, and ever since I don't actually know what's going to happen with the stocks I have. This, however, is not something that happens quite frequently and I consider the amount of money lost in this single case and I can live with this. My method for decreasing the risk of loss is by DCAing slowly into assets that I have high conviction of, and when the price recovers, I close the positions with lower profit rate. It might seem like I'm only buying stocks and never let go. However, I am absolutely ready to let go of shares where I realize that the fundamentals have changed. There are some assets that I only hold for a shorter period of time, and there are some that I intend to hold for at least 5 years. Certain entries have been so well timed that I would need a really good reason to sell those positions. Others, however, are easier to close with just a bit of a profit. It really depends on the market condition. In the next 4 years, I expect quite a lot of turbulence in the markets, but an overall positive outcome for the US economy and the US stock market in general. This means that probably there will be massive sell-offs of certain shares with rumors of different tariffs being imposed, only to provide a considerably good entry point in potentially successful companies. The mantra I have to repeat to myself is to check the bigger picture. Is the reason for a sell-off temporary or permanent? If a company is well managed and generates a substantial profit, pays decent dividends to investors, and there is a temporary issue, I have no reason to doubt that the management is competent enough to deal with it and fix it. On the other hand, if the success of the company is because of a temporary reason, but otherwise it is easily mismanaged, I would rather just keep the chance to invest. Diversify, diversify, diversify. This is true in almost every investment case. I am looking at a wide range of different business sectors, mostly technology stocks, but I like to mix things up with some other categories like pharmaceuticals, energy, or entertainment. I even own some GameStop shares just for fun. Usually, I try to put companies on my radar that I know very well myself. I know their business model, how they make money, and what the future potential is. If I am getting interested in a specific company, I start reading their quarterly reports, listen to their leaders if they ever do a serious podcast, and I deliberately ignore paid pieces on legacy media outlets. This way, I keep on learning about different areas of the global economy, which is always nice, and I keep a diverse stock portfolio, which is again, nice. Alright guys, this was my introduction to investing in stocks on eToro. I hope you like the content. You can find a detailed portfolio breakdown and all useful links in the description field. Starting on January 1st, 2025, I will upload an update video of my portfolio every month just to show you how it grows over time, how I pick certain stocks, or if I found something interesting during my market research. Let me know in the comments if you also had some good stock picks recently or if there is some company that you are particularly interested in. See you at the monthly updates. Big money out.